Hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading. I want to share with you a very important and special piece of intermarket analysis, which I've been paying attention to really over the past 6 to 8 months. This may take up about 10 minutes of your time, but it's a very important piece of, again, intermarket analysis, which I think should be made more public. The reason why is because right now we are sitting at a very important pivot point. Now, a pivot point in and of itself is really just support and resistance. However, there are differing levels of support and resistance. We have these minor levels, which sort of move in the minor conjunction level of the trend. We also have these macro pivot points. And the macro pivot points are levels where markets have really established themselves or based themselves really for any period longer than about 4 months. Let me just bring up the chart so I can show you this in more detail. Dow Jones Transportation Average, it is more or less the cousin of the Dow Jones Industrial Average. It's less followed, but it's very, very important according to Dow theory. Now, in theory, the Dow Jones Transportation Average, along with the Dow Jones Industrial Average, should move in agreement with one another. However, at the moment, we are sitting again at a very critical pivot point, and it really looks quite weak at this particular moment in time. Yes, we have established the range in this particular market earlier than the Dow Jones Industrial Average. As you can see, since November 2014, this market has been range bound. You can see that we've got consistent selling pressure at this resistance level around 9,200. And if I change my pen color once again, we have this really strong support level around 8,645. We've been moving back and forth, ping-ponging up and down between support and resistance for a period of 1, 2, 3, 4, 5, 6.5 months, I'll call it. Oh, we're very close to the half month, 6.25 months. You get the deal. Half a year. It's a long time. It's a macro pivot point right here around 8,650. We're trading at 8,559, but we are yet to break the actual swing low. So we're sort of still sitting back just watching this market. The reason why this is so important is because these markets need to work in agreement with one another. And if one market is to remain healthy, i.e. the Dow Jones Industrial Average, well then the Dow Jones Transportation Average should bounce from this location. However, the reason for this video is because what if, and this is the question mark, which is also important, what if this market starts to push below 8,500? Where is the next level of support? And this is why this macro pivot point is so important. The next level of support comes in around 8,000 on the daily chart. Now, the reason also why this is so important is because we are starting to break the actual trend lines. We haven't done this since we established the bullish trend in 2009. You can see that we've established the primary trend. We used the low back in 2009 in May 2009. Pardon me for just saying 2009 so many times, but we've really just established the primary trend going back to 2012. Now, as we moved into 2013, the trend itself started to accelerate. It's what we call a fan line. And you can see right here, price action bouncing off this very accelerated trend line. And you can see that it acted as support here once, twice, 3 times. We've got 4 touches, 5 touches, 6 touches. We broke down below it, albeit for about 2 weeks. So I'm not really going to count it. That's about a 7th touch right there. And if I zoom in onto the detail, this is going back to the most recent daily price action, which I just examined for you. You can see that we've really been sort of fighting this bullish trend line right here. This candlestick right here is very important. This was the candle where we broke the bullish trend line. And you can see since then we've been stuck in this consolidational type of pattern. Maybe this will be a distribution. This is also according to Dow theory. We've got different stages of the trend. We've got the accumulation. We have the public participation, which drives the bullish trend higher, which is what I've just essentially referenced with you in that trend line type of drawing exercise. But then we also have the distribution. And right now this looks like an awfully similar type of trading behavior to distribution. This is where the smart investors, the mutual fund managers, the smart money, in other words, start distributing their positions to the public, right? They're exiting their positions because the public believe that this trend is going to continue. Not only have we broken the accelerated fan line, we're actually coming down and retesting the second fan line. Remember how we just zoomed out and I said I'm not really going to count this particular one here on the 7th? Well, if we don't count this and we use this particular candlestick right here, this little touch here, and we project it into the future, you can see that we are starting to flirt with this trend line, this second fan line right now. If we start analyzing the actual weekly candlesticks, they're very bearish. Although we have Thursday and Friday's daily price action to really factor into this week's type of candle, we are down 207 points on the weekly. This isn't really even considering the shooting star going back to late 2014. We've got a hangman, we've got long day bearish Morobozu candlesticks. We've got hangman candlesticks. We've got spinning top candlesticks. Again, shooting stars. We've got one black crows. A lot of actual bearish sentiment is taking place. And again, we may look back in time and say, well, this was a period of distribution, which sort of, ushered in the next downward type of move, or at least the correction in the transportation average. Now, this is only the beginning of the analysis, which I wanted to walk through with you. Sorry if I've taken up a little bit too much of your time. If I zoom back in on the daily, you can see that we've been flirting with the support level over and over again. This is the first trend line which we've broke, and now this is the second fan line which we are starting to dance around. Now, there's either two directions this potential transportation average market can move, this index I should say. It can bounce off from support here at 8,650, or instead we can start to break down below this level right here. What is most interesting, again, I do not have a neutral bias, I do not have a directional bias. I can easily place a trigger here at 8,869. I can also place a trigger down here, about 8,471. You can play the relevant ETFs on this particular market, but this is where, the actual analysis is leaving. They are, or they should be, complementary to one another. The industrial average and the transportation average, they should track very, very closely to one another. So if I bring up the actual Dow Jones Industrial Average, that is the line here in purple, and I change the transportation average, which is the dark or the black line here, you can see most recently, this is what I want you to pay attention to. These markets, you can see, track very, very closely with one another over and over again. You can go back and do this as a homework task. You can see for yourself the relationship which they have. But most recently, throughout the month of March 2015, this is the critical point right here, they've started to diverge. You can see that the transportation average itself, if I can bring up a new color right here, which you'll see, I'll use the blue line, is starting to track down. This is what I've been speaking about. And the actual industrial average, much like the other two markets, the S&P 500 and the NASDAQ, are still trying to push higher. We're getting the divergence between these two arrows right here. Okay, this is the sort of the drill which I want to speak to you about right here. Now, this cannot go on forever. This is the critical point. This cannot go on forever. This divergence will always come back together. There'll always be a meeting point in the future. It's hard to actually forecast when that meeting point will be, but you can go back and see over and over again that when you get periods of divergence, right, they come back together. Whether it means that they go through a continued period of distribution or accumulation, or if we go back to even 2007, the most recent sell-off, excluding the 2011 correction, which wasn't actually a bear market. The most recent bear market was in 2008, 2009. You can see for yourself once again that during 2007, 2008, they really started to pull apart. And they got back in agreement at times, but they still remained to diverge a little bit until we really got into the actual breakdown of the overall markets. Once we broke these critical support levels in 2008, you can see how once again they move in comparison or in unison with one another. And this is what is most important at this particular moment in time. These markets, these very closely knit markets, according to Dow theory, are diverging at this critical level. We're at very important pivot points, macro pivot points, where traders, investors need to make a decision as to whether the Dow Jones Transportation Average is going to hold this support level, or if in fact we're going to make the break to the downside, which has been set up over the past 6 to 7 months, or 6.25 months to be exact, as we just worked out, or if in fact the Dow Jones Industrial Average is going to have the strength to push above this resistance level, which we've been paying very close attention to over the past 3 months. Now, as a technical trader myself, someone who lives off technical trading, derives their income from technical trading, it's been a very hard time over the past 2.5 months as a swing trader to make good money in this market. The reason why is because there hasn't been any momentum or commitment in direction of the overall markets for a prolonged period of time. We've been going up and down. We've been moving into lower range bound types of swings, albeit this market is flatlined. It is absolutely flatlined. Let me just write this here. If you can make out my horrible writing just here, flatlined. It's completely dead. And you wouldn't wish it upon your worst enemy. If it was a heart rate, it would be done. There's just no pulse to this market whatsoever, outside of course, the intraday types of movements, which are just incredibly erratic at this particular moment in time. So I'm very interested. I continue to say this, but I genuinely am, to see whether the Dow Jones has got enough power in it or momentum left in it to push maybe once or for one final time higher. Based on this measured move right here, we've got our projections, and I think maybe this may be the ultimate push higher, because you start to see again these markets make these interesting moves, which very rarely happen. GDP growth again anemic at 0.2%, probably going to be revised down with the most recent trade deficit ballooning out once again. These things are starting to form, and a lot of negative macroeconomic data again being released, even most recently during Wednesday's trading session, which appears not really to be influencing the market. Now, that's a telltale sign in and of itself that we are in a bull market when there's so much negative news being announced, or economic news being announced to the market, and the market continuously shrugs it off and it just, continues as if everything is okay. That is the telltale sign of a bull market. However, we are really flatlining at this location. We are really, really flatlining. I mean, the year 2015 so far, this is where we began the year, this particular candlestick. What I might do is just show you this on the Dow Jones Industrial Average, just so you can visualize this for yourself. Here we are in May 2015. We're 5 months into the trading year. Let me just make this into a thick line. And we began the year just here at this level right here. We opened the year at about 17,828. Here we are 5 months later, and we're at 18,059. I mean, this market has had some wild oscillations up and down, but the overall net movement has been marginal. It really has been marginal, and it really feels as though the market is starting to price in all of this negative news. It's starting to actually influence the market. People aren't aggressively buying the dips as much, and people are more so willing to sell on any rally higher. That's what feels to be going on underneath the surface. I cannot prove this, but just taking a look at the Dow Jones Transportation Average and the Dow Jones Industrial Average, this is what appears to be happening. And I wanted to share this with you. I will keep up to date more so with the Dow Jones Transportation Average. I wanted to share this with you because I hope you see the benefit of me speaking about these types of things as they progress. I hope you appreciate it. I don't know whether people do. So if you do appreciate it, write down in the comments and say, look, I like this analysis. Otherwise, I'll, keep it to myself. I mean, I don't mind sharing this information. I speak about it a lot in pro with the private students, but sometimes I like to make this information public, at least, just so people out there can start putting this together for themselves, or at least they can start making a little bit, or making more so intelligent decisions when it comes to trading and what's going on with the overall markets. I'll leave it there. However, right now in Australia, where I am in Brisbane, it is actually a Thursday evening, and I just wanted to do this video while my phone continues to go off and just inform you about this most recent market movement being at this very critical pivot point, this macro pivot point on the Dow Jones Transportation Average. I'll leave it at that, everyone. If you have any questions whatsoever, email me, success@pivotpoint-trading.com. Have a great day of trading on Thursday. I understand that there are a lot of open positions. We have Tesla, we have Netflix. Facebook was one that I honestly forgot to reference yesterday. I referenced Caterpillar. These are the 4 ones which are sort of going off. We're also in positions on CVX, which is slightly profitable at the moment. I've referenced the XOM trade, which I put out, a week ago as sort of a bonus, which is looking really, bearish and really profitable at the moment. And a lot of other stocks which is still setting up really, really nicely. Boeing Airlines is one of those stocks having moved into that sort of, resistance level right there. So, something to contemplate at least. You can see the volume falling off Boeing Airlines as I spoke about over the weekend. So you can really put this stuff together and get a very good understanding of sentiment and what's going on in the overall markets. You can see, once again, not to single out this particular stock at all. This was just a random stock which I'm speaking about because it's one of those ones which we're waiting for over the weekend, but you can just see what the market's doing and how some of these leading stocks are also setting up a lot of bearish moves. Boeing Airlines is one of those stocks. If we go to the pro list very, very quickly, this is the secondary list. Disney, a lot of people, again, very aggressively wanting to buy the stock into earnings. You can just see all of the bearish candlesticks. I mean, look at this. Look at this. Whenever we gap up, people are just willing to sell. And it's just not a one stock, it's broad market weakness. Disney's one. Gilead's another. Look at this shooting star once again, playing around this pivot point. Gilead's been a very ugly stock recently, a very hard stock to trade. So I haven't really been placing any trades whatsoever on Gilead. Look at this perfect engulfing type of candlestick pattern right here. It's even more so like a dark cloud cover. We gap up, we pierce at least halfway into this white candle at this very perfect level of resistance. I've even referenced this, 2 or 3 weeks ago on this breakdown trade at 110.89. I laid it out for you on a silver plate. Wait for the bounce and short at this location. If you're not in HD, I mean, boy, oh boy, this looks like a really good trade setup without going into any additional analysis. Starbucks, I referenced this candlestick right here being a great exhaustion type of trade. Look at what has happened since. This was a 50-51 short entry. I mean, we've got doji, we've got shooting stars, we've got, again, engulfing or one black crow candlesticks, we've got spinning tops. Although we haven't seen the critical rollover, I do think that Starbucks in and of itself is really rallying on borrowed time. Any move higher up until 51 or 52 bucks is really going to be a really great shorting opportunity on this stock. It really will be. Just give it some time. We're still battling with the exponential moving averages, but you can see the slope of them is really starting to mellow out and move sideways. And to conclude with, I didn't even know I was going to go down this path with you into this random stock selection on this Thursday evening, but it's always, good to speak about these things with you. We have Target here as well, and I can go on and on about these stocks. I mean, I've made it so clear. Go back through my catalog. I delete videos which, like 2, 3, 4 years old. I did that most recently. So my actual video count at the moment, I think I've culled from about 400 down to maybe 30 videos, but I am going to keep up, most recently the recent ones, and then maybe delete the ones that are 2 months plus old. That's sort of like my, what I'll do from now on, just because there's so much information out there. For better or worse, a lot of people can actually learn a lot just by looking at these videos. But I like to do this in the current time because if I've got an active viewer base, people who are watching these trades form and seeing the analysis form for themselves, that's what's most important to me, because it's current, it's real, it's live. Real trade setups, real profits, just real analysis. But you can see right now, I mean, I'm sure that video is up. I mean, just go back to this time frame, mid-April 2015. Watch me speak about this ascending wedge right here, and then the percentage breakdown. We referenced these candlesticks. The exhaustion gap was another video which I referenced, and then this particular candlestick right here. And you can even see the entry. I mean, going back to 80.81. And what I've even done is set up the next most recent bear flag, which seems to be rolling over. All of this analysis, however, completely discounted on the back of earnings. So, I mean, we've got a really good understanding of sentiment, of psychology, what's going on with traders. Same with HD. I mean, we can see what's about to happen. It's just whether it can happen before earnings, because earnings announcements can come out and they can move the price of a stock, incredibly. I mean, it can just throw it up. It can throw it down. It can go ballistic. It can go anywhere. I mean, the best way to trade earnings, by the way, is after the announcement itself. So please don't look at this analysis and say, look, I'm going to short HD into earnings and hold into earnings. That's not what I'm saying whatsoever. I just want to be very clear on that, because again, this is a wild card, right? It's a W, it's a joker. Anything can happen. So I just wanted to clarify that. But this video has gone far too long anyway. I need to render this and put this up on YouTube. So have a great Thursday's day of trading. I'm not sure if we'll do a market update, considering the amount of analysis that I've just put into this video. But if you want, email me success@pivotpoint-trading.com. All the best traders and friends around the world, get involved. Have a look at that pro class. It's, you're really going to learn a lot by participating in that analysis workshop. All the best. Goodbye.